Bitcoin now on track possibly to go to 80K, whether that is the end of the year or a little bit further. We'll break it all down for you guys, give you some insights to all that good stuff. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today, and that is Coinbase. If you're brand new to crypto and you need a place to start, Coinbase is your first destination. All you have to do is visit coinbase.com. Make sure and get your first account there. The future of money is here. It's very easy to do. It's also one of the most trusted places out there to start buying and selling crypto right there on the Coinbase app. Super slick app. Also have the Coinbase wallet if you want to get into self-custody. All of that within their ecosystem. Use our link, get $200 in crypto to get started. All right, let's go over to a first few hits here. A couple of points I want to talk to about is this statement right here. Bitcoin's new price targets of over 80K may not actually be the all-time high. A lot of people still believe we could see a six-figure Bitcoin coming in this bull cycle. Many people looking at this, there's a couple of indicators that kind of favor this position, but an item brought around 69,000, assuming people bought Bitcoin at 2021 top, would currently be priced at around 80K with the current cumulative rate of inflation at 16.2. So basically what it's saying is, listen, you already, even if you purchased at something because of inflation, the value is still greater. So this is one of the reasons that many people look at digital assets as the only way out. By the time we have our next round of printing in the next 16 to 18 months, it'll be 95K, 100,000 nominal Bitcoin price, obviously potentially in the cards there. Bitcoin price up 18% over the last 14 days, despite the September being a historically bearish period. And normally October being one of the periods that has been very high performing. Now Bitcoin is facing its final test before undergoing a bullish trend shift. So that's the question mark right now. We could be at its final doorstep before we do see Bitcoin and some of the other digital assets start to take off. So it's currently looking to flip the resistance supply zone at 65K as we speak and record this. So we'll get into the charts here in a second and just take a look. Uptober has been one of the areas that has always been looked at as one of the greatest performing months of the year. And of course, guess who else is performing well? That, of course, is Tether's market cap hits a record high. A lot happening there. Market capitalization of USDT has been steadily rising in recent weeks and months and has rocketed from about 118 bill to 119, which is an new all-time high. So not slowing down. Stablecoins are only a good indicator as to the fact that there's a lot of dry powder sitting on the sidelines ready to deploy into what we think could be a burgeoning bull market, as well as an altcoin bull market coming at us very quickly. Most recent rise follows a market cap increase of 1.5 billion in the last 30 and of approximately 36 billion in the last 12 months. Imagine 36 billion going into that stablecoin and the amount of money that they're printing in terms of revenue. So again, Tether very, very solid going forward. I want to go to a clip real quick. This is Peter Thielen talking about how much could be deployed by the end of this year that could stimulate this market boom. Take a look.
But we can probably estimate that something between 5 to 8 billion US dollars might be deployed between sort of like December to January to February. That's when we think the creditors are going to be paid out, and that's going to be a big driver. So I think once we sort of like tackle this election risk, this election uncertainty that we're going through right now, and keeping in mind that September is usually the worst month of the year for Bitcoin, and then October is usually the strongest month. I think the average return in October is something like 22%, with something like 8 or 9 out of the last 10 years positive. So we're coming into this area now where sort of like once we're bottoming out, that suddenly we have more positive risk catalysts, meaning the US election, meaning the FTX creditor payout. So it's actually quite constructive for a year-end rally. Just we need to get through this short-term volatility right now.
All right, so short-term volatility, I think a lot of people would agree with that when you look at it. October, of course, he is correct. It's actually 9 out of the past 11 years. I'm going to zoom in on that for you guys just to see what's happening here with October. Some of the things that you have to kind of look at is the historical, all the way back to 2013, plus 60. Look at these gains during some of these months. That was a really good one in 2021, which was the last bull market, up almost 40% just in October. So be ready. This could be the signal going forward into this next bull run. It was the time that we saw 2021 happen. So definitely one to keep an eye on. Another thing to keep really a close watch on, and that, of course, is the Fed and its rate cuts. And of course, you look at the 50 basis points and where it is. There's a lot of things that are trying to say, well, you know, we've got a strong economy, or it appears to be strong. But if you look at some other indicators that are starting to point at maybe a different viewpoint, this is one statement. I have a macro view that Jay Powell and Janet Yellen want to juice the financial markets to help Kamala Harris win the election. This is, Arthur Hayes. I believe they're trying to get the markets to go even higher to make people feel even wealthier as they get into the ballot box in November. Could that happen in this short period of time? Because we're only really talking about 60 days out here. Inflation is going to accelerate after that point, because if people have been saying that the U.S. government has been recklessly spending money, how does it make it cheaper for them to borrow to help that position? Well, you know, that's the problem that I think a lot of people are looking at, is what is it really going to do to the market if we get lower interest rates, and how quickly we accelerate to that. Now, most people are anticipating only another quarter and quarter, so another 50 basis points by the end of 2024. Going into 2025, even though now people are indicating that we may see a recession, and we may see a groundswell of shift of attitude toward that. So this next 30 to 90 days is going to be critical for what this next bull run could be doing, and we're going to bring it to you right here. So you guys need to stay tuned on that. Make sure, by the way, if you have not hit the like button right now, go ahead and do it. Just hit the like button. It does help us, and it also helps other people discover videos like this for sure. The Fed must have a confident consumer. This is one I think that everybody agrees with, is the Fed kind of looks at, you know, the consumer power, but it's really more around price elasticity and, you know, the idea of inflation and what that might mean. If you have a confident consumer, it usually means that inflation is lower. And there's a couple of points he's hitting at. I can't let consumer confidence crumble. This was looking back into the 2007 and 8 financial crisis. Individuals were defaulting on home loans left and right. Bank balance sheets were ballooning, and the assets were plummeting into value. That's something that we have not seen yet in right now, at least in this current market position. So the question is, are we maybe entering that zone? That's a real big question. Carnage built, consumers panicked. Americans felt their net worth declining and started to pull back on spending. That caused a massive shift in how the market adjusted. If you look at that chart right there, the University of Michigan on consumer sentiment and the amount of decline it took in a very short period of time. That would be the factor, I think, going forward. If we start to see, it's kind of like, you know, a scenario where the market starts to see that consumer sentiment starts to shift down and everybody starts running for the door. And I think that's the concern that right now maybe the Fed has. They know what type of havoc and loss of consumer confidence can wreak on the economy. So the last thing I want to do is see that happen again. Now, the question will be this rate cut cycle, because really 50 basis points between now and the end of the year, that's a 1-point range. You think about it, we've ran interest rates up to over 5%. Being able to get back down into a below 3 is going to be critical. And I think we had Jim Bianco on last week talking about that very scenario, is that if we did get the 50, that the 3-point interest rate was really the target zone. Does that mean that the Fed is going to be more aggressively cutting in the first half of 2025? And if that does happen, how do the markets respond to that? Is this timed perfectly for this bull run? So if you guys want to catch that and more, you've got to do it by joining our Diamond Circle. The way you can do that is just join over on paulbaronnetwork.com. You also get exclusive videos from me. So it's only available to our Diamond Circle, our MSI members, and our, of course, Mastermind members. So I do these additional videos. They're not here on YouTube. So make sure and join. Just click the link down below and you guys can get in on that. I want to go to another clip here real quick, because this will get into the next kind of frame in terms of how much money is really on the sidelines. Are we all deployed? Because remember, the S&P has hit pretty much an all-time high. How much money is left on the sidelines? Let's take a look.
And when you look overall, I mean, this is kind of like translating it back into what does it mean for your portfolios and what should you do right now? I mean, you still have $6.5 trillion in money market funds. You do have inflation. coming down. Now you have rate cuts, and we're actually with record profitability when we look at U.S. companies' earnings. So all of that is actually a pretty constructive argument, even with a lot of these worries that are on the table, whether it comes to election volatility, the seasonality. I mean, the market is kind of telling you with that backdrop that there's still a lot of capital that wants to come into this market.
So the S&P continues to rise through the end of the year?
I think we'll end up higher in terms of the S&P 500. I think October, we do have to keep in mind that that is a challenging month, just given the fact that there is election uncertainty. And so in every election year, you tend to have a negative October where people are just taking their gains, taking chips off the table. But once we have certainty into the results of the election, you tend to then see a rally into the end of the year.
All right, so that would be the real question mark, is the rally into the end of the year. If you look at the S&P right now, it is near, well, it's already hitting its all-time high at 57.19. Changing in right now, another green day on the move as we speak and record this. But even over the last couple of days, we've started to see another trend upward. If you look at gold, also right there in that same very scenario, let me kind of zoom in on this last little bit here with where gold has been. Look at this rise right here. Just to give you an example of what gold has done over the last, let's say, 2 weeks. Let's take a look at where gold has been. And typically you don't see these kind of percentage moves with gold at almost 10% in a very short range. Now, what does that mean? There's a lot of people that are saying, well, there's a lot of cash being deployed off the sidelines, now going into assets they think are going to potentially position into a recession, which could be gold, also digital assets. I believe that's why we're going to probably see Bitcoin become part of kind of that next phase. Other things that are playing into this, of course, is the political landscape. And all this kind of comes into where the Harris campaign is on digital assets. Well, guess what? The very first time that digital assets has been mentioned occurred this weekend. And it was in a very kind of nonchalant way. But I think that the president, potential president here, is going to have to really position a narrative that not only is strong, but convincing. And I think that's going to be the question mark going forward. So this was at a Wall Street fundraiser over the weekend. Kamala Harris said she'd encourage crypto business while protecting consumers, you know, still kind of giving herself an out to fund the shenanigans of the SEC. We'll see. Of course, you have Ryan Sean Adams coming in here from Bankless. He's not buying it at all. I'm glad Harris said something, but this progress is a grain of sand. And I think if you look at, to see what Harris will do, look at the people staffing her future admin. If you see a copy and paste of the Biden admin, well, that's right. That's what is happening. There is, I don't believe, if we don't see a real shift in the administration staffing, but also key positions, that's the biggest part of it, key positions to change the narrative coming out of the administration, I think this is just going to be a rinse repeat. The question is, does she even win the election? I don't think she's going to, but that's me. I don't think she's going to. I don't think she has the campaign to pull it off. Remember, Hayden Adams over at Uniswap, Kamala just said, we'll encourage innovative technologies like digital assets. I believe this is her first time referencing. And then, of course, people are saying, hey, dude, listen, she's literally suing you right now. Come on. Let's read the room a bit, guys. Don't believe in this right now. It is not a real thing. The Democrats have not turned over to accept digital assets and crypto. We are in a fight. Do not put your guard down. Do not put your guard down. Because if you do, you will never become a Bitcoin millionaire. Bitcoin millionaires are up and they soar by 25% in 2024. This is just another reason you should be in digital assets. You understand what's going on. The fiat fail is in full force. We are seeing the kind of limitations of what it does in terms of not only inflation, but in the world stage. I think this is going to be a factor that many people just have to understand. Look at those Bitcoin addresses right there. Man, those are some people that played this perfectly. Other things that are happening, of course, Michael Saylor, the approval of options for IBIT will accelerate institutional Bitcoin adoption. I don't know if it accelerates. I mean, sure, Michael knows a lot more than me, I'm sure. But I look at it in the sense it's just going to make it more aware. And that most likely will accelerate, you know, more adoption if there's more awareness, just because we're going to see some degens now on Wall Street playing the options game with Bitcoin. And the fact that this is now available, that's a pretty big deal. That's a pretty big deal for sure. Look at the difference of his performance. So you can't really go against it, but he's top 10 performing stocks in the S&P 500 right there. That's NVIDIA right there. Ooh, nice. If you're an NVIDIA stockholder, but if you are a MicroStrategy holder, well, things are a little different there. Look at that difference there. Arista Networks, Eli Lilly, I mean, this Broadcom, Marathon, that's a pretty hefty group right there. And of course, Michael Saylor outperforming all of it. And he's not letting up either. I mean, he's coming in with another $1 billion in Bitcoin planned over the next little bit. So we'll see if this plays into the market, if we do see a retracement down before we see the 80K. Last up here, and then I'll chart it out for a second. But you've got youth unemployment rising now. And this is the thing that I think people have to make very clear assessment on. And that is that if you have young people under, at 16 to 24, this is a problem if we see a lot of the young people starting to lose their jobs. Because why is that? Well, they're going to lose faith in the system. What is the opportunity for them to earn money and be able to outpace inflation and possibly the idea of national employment rate? Well, it's going to be digital assets. So I think that's the factor that plays into this right now. Bitcoin, let's take a look. It's on a little bit of a flat day right now, holding at the 63.4 range. Over the weekend, it edged up slightly. And of course, the big news of the day, of course, is Ethereum right there, up almost 4% and climbing over the 2,600 mark and had hit 2,700 for a short bit. But it looks like ETH might be beginning its first real run here. So we'll take a look at that. Of course, Solana just wrapped up their event at Breakpoint. Solana is touched off of it, but if you look at Breakpoint, I would say this was your run right there on the Breakpoint, opportunity. And that was Friday the 6th going through. Let's go over here on Saturday, because that was technically Friday was the last day. So that was a 19, almost a 20% move for Solana, still trading at 144. So pretty solid, even though it's regressed a little bit, but it's pretty solid that it was trading at 144 and hit 150 at one time. So a lot happening. There's still some other tokens that are moving pretty heavily here. You've got Near Protocol up a lot today. Also, you've got HBAR making a big move after a regression. This might be interesting to see. Is something brewing over there with Hedera. Going to be on the lookout. IMX up a lot, almost 7%, but it has several days in a row. Is IMX starting to finally come out of the zone of that low that we've been watching for quite some time? This little zone right here finally breaking through. So we could see a big upside here for IMX. All right, we're going to do, we'll have some trading videos for you this week. We've got a lot happening. We've got some congressmen coming on the show. Make sure and subscribe to the show right now. Just do that, because that way you'll get notifications when we do go live, or also when we get other stuff happening here on the channel. At least it will hit your algorithm and you'll be able to see those things when we release them. Don't forget to follow me on X @PaulBaron. We'll catch you next time right here on TechPath.